Alright guys, welcome back to another video, and if you are new here, thanks for stopping by. If you enjoy the content, hit the subscribe button as each of the day's videos builds upon the previous day's analysis, and we wouldn't want you missing out on the analysis. Now, we're looking at the anxiety panic dump from yesterday, what the signal means to the market. Of course, in the case of Bitcoin and cryptocurrencies, I have four major signals, four major reasons why this particular play shows that the markets are likely heading higher. This, along with other signals that we have seen already, and it just continues to build upon the bullish narrative. Along with this, we have an agenda to get through. We got lots of details to cover in today's video, as we usually do. So make sure you hit the like button as well. Subscribe to the channel. It's Jason Pizzino, your home of macro cycle analysis. We're covering Bitcoin, cryptos, the stock markets, and the real estate cycle. And if you want to get more of this information on a weekly basis, head over to the free crypto and economic report. Click that link in the top of the video description, subscribe to it, and you will get it in your email inbox. The latest one has just gone out. So here we are, Bitcoin finance, the narratives are building for a blow off top. It has obviously been the view of myself now for many years. You've seen this before. If you haven't, it's the 18.6 year cycle. We are well and truly in this phase now, the winner's curse phase. And there are many things that are basically happening around the globe in the financial markets that continue to push this cycle higher and higher, which will eventually form the cracks to a major correction, a major collapse, a major recession, a crash, whatever you want to call it. But first, prices really do go much higher. Stock markets, Bitcoin is moving, cryptos, they'll have their show as well, but they're not the main emphasis. The main stuff is the stock markets, the real estate markets, and for us, Bitcoin and then cryptos. So these are several of the narratives that continue to build. We come back to these as the cycle continues on, but I want to look at some of the major signs that we are seeing more upside in the stock markets. Several market breadth indicators with a flawless track record just triggered a buy signal. Now, I bring this up because in this stage of the cycle, the second half of the real estate cycle, right there, you typically see financials, real estate, those sectors doing quite well because you're seeing higher and higher prices in real estate, and that sort of feeds into one another. The banks are lending out money, the interest rates are obviously higher at the moment, more profits are being made. The home builders are making profits because they're basically building on the land, selling it back to the people. People need loans to get those properties. So that continues to fuel this stage of the cycle, even if the Fed isn't printing, whereas in this case, they have turned it back on. But going to this particular signal here, over 30% of the S&P 500 financial and industrial sector stocks registered 52-week highs on Monday. So we did cover a little bit of this in yesterday's video, but I also want to focus in particular on these two, the XLF, the XLI, financials and the industrials, and what this means to the market, which of course also is very bullish for Bitcoin and cryptocurrencies. So these have registered new 52-week highs in these sectors, right? When that happens, there is a very high probability that over the next 12 months, you're going to see pretty significant gains. And there is a 100% hit rate of higher prices. Basically, it hasn't failed. I'm not trying to find things that never fail because eventually something does fail. Is this going to be the time? I don't think so. I think it's going to be the next cycle, somewhere after 2026. But in this case, the short term and the longer term here, or medium term, 3-month, 6-month, and 12-month, are all showing very good returns. Something we didn't look at yesterday was how big that average max gain is. And the average max gain for the S&P 500 is 18.3% from this point, which is pretty crazy to think, considering the S&P 500 is at 5860. So where would 18% take this market over the next 12 months? So it triggered on Monday. Let's take it from the top or the close of Monday's bar and go up 18%. That is nearly 7,000 points. So from 58, 59 on the S&P 500 to 7,000 over roughly the next 12 months. That is what the average has been. I'm not saying it has to get there, but a lot of these indicators are showing more upside, even when it seems almost impossible for these markets to keep going up. But that's exactly what we want to see, of course, if we have money in Bitcoin and if we're hoping for an altcoin season. You need to see the rest of the markets going up. Now, another sector that also does pretty well is discretionary. That's basically when people have a little bit of leftover money, they're going to use that on things that they like. And we are seeing it now. Travel industry to contribute record 11 trillion with a T to global GDP in 2024. Travel spending in the US, China, and German economies is expected to contribute the most to GDP. So people have got extra money that they are spending on travel to the tune of $11 trillion across 3 of the largest economies in the world, US, Chinese, and the German. That is not a sign of a recession, but a recession will come, but we're seeing higher prices first. That's just something that we need to keep in our minds, especially as investors. We're not just your armchair news headline reading person here on the channel. We actively have money in the markets, so it's important that we understand what the markets are doing and understand that we need to be prepared for both sides. So, with that in mind, it seems like more signs of the winner's curse. People have extra money that they are spending on discretionary things such as travel. So the other thing is new all-time highs. New all-time highs for Australian real estate reaches 11 trillion for the first time in history. Obviously, I posted this on X. New all-time highs, if you are familiar with it now, happen in major bull markets, and they continue time and time again. You get an all-time high after an all-time high after an all-time high. Yes, eventually you get a peak and a crash or a correction or a collapse from an all-time high, but you have multiple all-time highs to get to that point before the correction. Many people like to try and short as soon as you get to a new fresh high or a new all-time high. But when you look at the history, you could have days upon days upon days upon days upon days, and then you get the correction. It could be a very, very long time, right? And we've seen that already in 2024. Now, just on a little side note here, sometimes you guys want me to write bigger titles or headlines or anything like that. This sort of takes the fun out of it. If this is what you want me to say every time, it seems a bit strange, but we'll see. Let me know in the comment section if I need to have a disclaimer this long to explain new all-time highs or the 18.6-year cycle. Moving on, we're looking at another piece of data here for the presidential cycle. We're now 2.5, 3-ish weeks away from the next presidential election. You might have your vote on Trump, maybe you got it on Harris. Doesn't really matter. The point is the markets typically go up in this particular year. That is the average of the movement up. And this is from July. So going back to July, or when they posted it, looking at the averages of how much the markets go up in that period, well, you can see that it's basically worked out almost to a T here. You had the blue line, which is the average. The gray line is what happened. And we know now from history, the gray line went up, pulled back pretty hard, and then continued higher, put in a new all-time high here. And we've basically been climbing like this in 2024, probably somewhere around the average, but actually a little more than the average when you look at the percentages down here. Nonetheless, the cycle shows that this year is generally up. The year before is generally up. And that second year is a bit of a tough one. It shows up on an average, but it's a tough year. It's not an easy ride to the end of the year. Whereas this particular year, 2023, was definitely an easier ride. But in reality, for the majority of people, it was not an easy ride. We know that from history that it was very difficult for most people to get into the market. So try not to make that mistake again. When things seem like they're not going well, and you can see that a cycle is showing that the timing is up, it's probably better to play on the side of the probabilities that we're going to see higher prices. So without further ado, let's have a look at crypto and Bitcoin, starting with the Fear and Greed Index. The greed is at 73 today. Yesterday was at greed as well, 65. And then prior to that, well, you guys know the deal. It was basically sitting around neutral and fear. Every time we had a little bit of a push up, the corrections came back and reset the market sentiment. Really good signs here that a lot of people still didn't believe that this was part of the next move, that we weren't going to go any higher. And looking at price, we were putting in higher lows. So coming across to BTC on our daily chart here, higher low, higher low, higher lows here. While the market was dropping off, you still had a lot of fear coming back into the market, which is a really good thing. You definitely want to see that for a sustained move to the upside. Something else that we've seen quite seasonally is the search volume for Bitcoin. Now we're in October, roughly around this October, November period, sometimes September, basically this period, you see the search volume drop off time and time again. Doesn't matter whether it's a bull market, whether it's a bear market, whether it's a transitional period. You can see through here, September into October. Finally, you get this sort of move out in late October, early November. You can come back to 2022 when basically FTX collapsed the entire market. Sam Bankman-Fried has gone to prison for a very long time for taking billions of dollars. There's October. Then you get this move up in November. Pretty low considering the event that happened. And October was also a very low period as well. This is just for the search volume for Bitcoin. So that's 2022. We go back to 2021. Basically, the all-time high was the 10th of November. The search volume was way higher for the beginning of that parabolic move. You can see how it just skyrocketed in late 2020 and January, February, March, into that peak of April. Then the crash in May really took the cake before people lost interest in Bitcoin and crypto. So a good sign for this next cycle. Even if the prices come back and push higher, yet the search volume is dropping off, it's not a standalone signal, but it's a pretty important signal to put together with the other signals, at least in my opinion and from our experience here on the channel. People aren't interested. It's probably unlikely that there is going to be a sustained thrust to the upside. Go back one more year, 2020, there's your October, moving into November. And again, search volume was very, very low. And here we are, we find ourselves at the lowest points since September, October of 2023. So we could be about to turn around. And if we do, look at meme coins. They are putting in higher lows. There have been extreme moves to the upside here, extreme search volume going back a few months there into March, again into May and June, and then most recently around this sort of early September period as well. Now we're starting to climb higher, potentially putting in higher lows here, even though memes, at least for the last couple of days, have been pulling back quite significantly. But remember, they have gone up quite significantly as well. And if you're in these small caps, you're going to see volatile moves. You might see hundreds of % up, and then these might be 60, 70% corrections. That's part of the game. If you can't handle it, get out of the kitchen. Speaking of which, our traders can definitely handle it, making very nice gains here. Well done to Nice, Adrian, Lord, Adam, gains upon gains. So congrats to you guys. If you do want to find out more about this or start to trade, check out the Ultimate Trader Accelerator. It's a free trading community that we've created to teach more people how to safely get in and out of markets and create plans for themselves, be self-reliant. If that interests you, link in the video description, create an account. There are plenty of steps on how to get through to that. Back to the analysis, and we'll head over to BTC now. The 4 signs here that we're looking at, overbalance in time and price. We have seen that. That occurred the 27th of September. That essentially means that there have been more more buyers in the market, at least pushing the price up higher than on any of the previous occasions throughout this consolidation. So price has gone higher in a longer period of time. That means more energy is coming back to the buying side for, I guess, a longer time frame. The second is higher lows. Now we've seen 2 higher lows after the 49K low, so that's another really, really good sign. The next is the weekly swing. We've seen the weekly swing tops break. If I change this over to a weekly swing chart, we have 1 and 2 with the higher lows. So now we've got that uptrend in the weekly chart. Previous to this, we did have an uptrend towards the end of the market, but then that of course broke down, which then resets the signal there. And there were many other reasons why we didn't think that this was going to go higher or much higher, or basically that was the end. And that was our 3-day signal, which we've talked a lot about on the channel. So on top of that, we've got the weekly swings. The next is the diagonal downtrend. So what is that? Well, we're looking at these tops here, here, and here. So 3 points of contact directly onto those prices there, or this price, and this one got rejected. Now we've broken through that. It could be failed, right? It could fail and come back under this level. But a lot of people want to find out leading indicators or early signs that the move is on. And when you find these earlier signs, well, then you put yourself at a higher risk of being wrong. That's just how the markets work. If you're trying to find signals to get into these lows, as we were looking at here in July and here on the 1st of May, which is a great price, $56,000, $57,000 was still a great price. You still just had to wait longer until the move looked like it was ready to go. There were signs to say that maybe we were going to go, but ultimately it failed and it came underneath those levels. But as I say, I'm looking for a low area, and I just want to get into the market within a low zone and get out of the market, dollar cost average out of the market, start to sell on some of the signs that things are getting way too overheated. I'm not trying to buy everything at the low and then sell everything at the top. I'm never going to be able to do that. I don't know anyone that has or will. And when you look at the professional, legendary traders of the decades gone by, none of them try to do that. None of them say to do that. It's only people in crypto that get really angry if you don't tell them buy at 49K and sell at $74,000. That's crypto for you. I'm just looking for a nice area under 60K. As I said many times, I think that was a fantastic buying opportunity. And now I don't know if it'll ever go back under 60K for this cycle, or at the very least around this sort of 56, 52K. It doesn't seem likely that we're going to come back underneath those levels. I can be wrong. I'm going to be open to that. That's absolutely okay, because at the end of the day, I don't control the market. But in terms of the strength here, that's what I'm seeing it. And provided we've entered enough positions at those levels, then things are looking pretty good. So these 4 signs alone are pretty good indicators of what is to come next. As I said, there are no 100% guarantees, and we're just working on probabilities here. But often when you see these signs, an overbalance in time and price on a longer term time frame, as we looked at here, higher lows forming, higher highs, weekly swing tops breaking, you're putting all of these things together, not just one-off things, right? Diagonal downtrends that are breaking, that have been holding the market down for a while, and the fact that the price has been held up above many major support levels, many major 50% levels, including the bull market support level, which was never touched at 44,500. You've got the 2023, 2024 range, that's at 49K. That was touched and bounced away very quickly. Then we had the higher low, and then the 56K level has been very good to us. It hasn't closed under there on any of the months, and now we start to find the price moving higher. Well, you have to put the probabilities on the side of the bulls that things are likely going to go higher. Now, one last diagonal I'll look at before moving on is this particular one here. Some others have been watching this level, which is very valid. It's the all-time high to the next weekly swing top here around May. This one is also got rejected in late July. So it's very valid that we could find ourselves getting rejected here and consolidating once again. I don't know what's going to happen from that point. We'll keep watching it as well. But for now, we've got plenty to work with for support coming into the market, even if this is another resistance level overhead. It seems like there is more support building down below than resistance above, trying to push that price down. So if we find ourselves in a pretty bullish scenario for October, when could we see any sort of corrections if people are waiting to get in? Well, I've talked about entering on the breakout, so that's another part of the strategy, but just looking specifically at analysis, and I might leave the details of this for the next video because this could go on for another 5 to 10 minutes, but I will just look briefly at November. November over prior years have had, kind of significant pullback, significant relative to the price action that had gone on previously to it. And specifically some key dates, somewhere around that sort of 7th, 8th, 9th of November have been key turning point dates. Some cases they've been basically flush outs. In other cases they've been tops here, like just little mini tops before you get a pullback. In this case, the pullback was only 8.5%, but that comes after a pretty solid move to the upside after a long consolidation. So any sort of power to turn the market around is significant in my books. So that's why I'm watching those dates coming into November. So what we could see, what I'm saying is a strong move leading to the end of October. Then you'll have any sort of economic announcements. You've got the US election, anything that people will try and attach themselves to, that might be a little bit of a turning point that could push Bitcoin back down. And that would be a bit of a fearful time for everyone, thinking that, oh, it happened again. We pushed to a new all-time high and the price came back down. And the dates that I'm looking out for Just looking at historic dates here from Bitcoin in November. So sort of earlier in the month, 7th, 8th, 9th, leads to a bit of a move, a turning point around mid-month, and then you can look towards the end of the month as well for another turning point. Something a little bit clearer would be 2022. You can see the 8th FTX collapse, Bitcoin, big emotional day. The 9th carried through, so basically just 2 days there, went dead. You had the low come in on the 21st, goes dead again until the 28th, and then the rest is history from that point. Let's have a look at 2021. You can see this emotional day pushing to a new all-time high, hitting 67,700 on the 8th. You get a top here on the 10th, big rejection, and then a push down in the middle of the month, basically breaking a lot of lows. We looked at those as gotcha bars, essentially a lot of late buyers coming in. The price doesn't go higher and then catches them in their trades, right? They don't get out and the price goes lower, never to come back into that zone. That happened middle of the month, around 16th. Then we get another flush out here on the 26th, so toward the end of the month as well, for a bit of a turning point. It's a pretty decent turning point until December comes along and collapses the market. Then we go back to 2020, all right? So just having a look at another few dates again. Early in the month, there's a correction there on the 7th, roughly around 6.5%. Mind you, you got this grinding effect, pop up, and that day, the 7th, reverses all of those pop-up gains. Then a little bit in the middle of the month, it was basically the only correction on this grind higher. And that happened on the 14th. Get towards the end of the month, flush out 26th of November, and then basically the end there. You got the 30th pump, 1st of December, and the rest is history from that point. So again, looking at the early turnings, the mid turnings, and the end of the month turnings. We can go back again, looking at the next year or the prior year to that, 2019, 8th, flush out of those stops beneath, comes back to test. The support gets rejected. So support turns into resistance. The market collapses from there. Surprise, surprise. November 25th, pretty significant turning point. And obviously the rest is history from that point. Sure, there was COVID, but we're looking at turning points for November, right? Go back again, 2018. What's this date? Middle of the month, 14th. Another 2 flush out days here, 19th and 20th. We didn't see those in the other years, but then we get a turning point here on the 25th. So a lot to consider for November. Should we see a strong move in October, then maybe we get some sort of hold up or flush outs in November. The way I could see that happening is if things get a little bit overheated here. We're already at 73 on the fear and greed index. So if that starts to go up into the extreme greed, which I believe is a reading of about 75, 76, that could be the precursor to getting those flush outs once we break to a new fresh high. This is just a scenario that I'm just preparing for, just in case, based on what I've seen in history. Best case scenario, we don't get any major flush outs and the prices remain higher. You get higher lows, but you still get the emotion on those days that flushes the price back down. 2023 was a good example, and I showed some other examples there. You still have the turning points around those particular dates, and it just does enough to keep it from getting overheated in extreme greed for too long, which allows the market to consolidate so that it can keep going. And on that, as it keeps going, then we get into the longer term timeframes here. And this is where things get pretty exciting, at least for the bulls, at least if you have a position as a bull. And then you get these long moves to the upside, 6 months, 7 months, 5 months. We looked at this in late 2023 and early 2024 when Bitcoin just was not slowing down, looking at the probabilities of how long these moves can last, right? So if we found around 5, 6, 7 months, 7 was very rare. But if we were to get another 5 to 6 months from this point, going from the low to 5 months will be January, 6 months will be February. And then you can start this dance again, okay? So I've got lots more I can get through. I'm gonna leave the altcoins for another video. I've got seasonality here, which basically backs up what we were talking about with October, then into November. Look at that right here. There are those corrections, right? But I'm going to leave that to another video. Otherwise, these things get way too long. Thanks again. Like, subscribe. And of course, if you want to get the free Ultimate Trader Accelerator. Link is in the video description. Create an account, follow the steps. It's all in your email. I'll see you guys back here at the next video. Till then, take care and peace out.